With a whopping 78% of commuters that drive alone during rush hours in Chicago, Illinois, car loans are, no doubt, a common part of the financial lives of these daily drivers. Over 700,000 cars are on the road during the high traffic hours, according to the 2010 census. In this massive population of commuters, breakdowns, collisions, and other mishaps will result in many of these people looking for replacement vehicles, which will, in turn, result in these people turning to the auto financing industry to make the purchase of a new car affordable. Looking at auto financing as an industry may be difficult for some consumers, but it is an industry that produces a product, which is marketed in very similar ways to the cars that this product will be used to purchase. There are more than 800 financial institutions operating in Chicago. While many serve larger commercial interests, the vast majority serve individuals, making financing a very competitive business. As an industry that lends money to consumers for various purposes, its product is marketed to potential borrowers on the basis of lower interest rates and lending fees that the next guy can offer, sometimes to absurd levels. Careful shoppers can find car loans that advertise low percent to no percent financing if certain conditions are met at the time of purchase. Those consumers that have perfect credit will pay the lowest interest rates on car loans simply because they are considered very low risks for default. The factors that place them in this group are not so much tied to income as to the regularity with which they pay their debts. In some cases, borrowers making an income that puts them at the low end of middle class can have good credit simply because they pay all their debts on time and in full. Where income is a factor is in what the borrower intends to buy with that car loan, and for how long. If someone earning a relatively low income has a history of making good on all his or her debts and elects to purchase an economy or used car, then that person will likely be approved for financing as long as that income is steady. Still, with consumers who are struggling with bad credit, car loan approval is not out of the question. The payoff to the lender for granting a high-risk borrower approval for financing is a higher interest rate on the loan and higher lending fees. In either case, these considerations can be negotiated down to whatever range both lender and borrower are comfortable with. In the case where a lender won't negotiate, there's always another that a prospective car buyer can go to. Lending fees are usually fixed, but there may be some in the contract that can be waived or reduced depending on what sort of credit reputation the borrower brings to the table. Interest rates can also be reduced if a borrower can make a convincing case, bad credit notwithstanding. Universally understood among all lending institutions, deadbeats need not apply. In the city of Chicago, consumers shopping for car loans can almost always throw darts at a city map and find a lender. There is no trick to it. The common requirement that all lenders insist on is integrity. An honest consumer who earns a regular paycheck will be treated well by any reputable lender as long as that person has realistic expectations with regard to the terms and conditions of both the car and the car loan. For every hardworking citizen needing to replace a car that has reached the end of its life, Chicago, Illinois car loans are an easy find. Federal Auto Loan. Good credit, bad credit, no credit, all good.